Hi and welcome to the Market Alert for Thursday, the 8th of February 2023. So big tech and Bitcoin bounce, regionals red, that's regional banks, as flotilla of Fed speak hints higher for longer. Mentioned this in yesterday's alert. They wheeled out a couple of Z-list FOMC members yesterday, Fed members, and obviously they did their best to send the markets a bit lower during the afternoon. Large investors, including real money, continue to indicate they are being forced to grab into beta through futures and or index options upside. So that's also interesting as well, putting the big investors into the options markets to take advantage of the continuing up move. And speaking of the up move, as I've said in the Market Alert for weeks now, US stocks mostly gained and S&P touched just shy of 5k. That's where I said that was going to. 40,000 for the Dow before we start to see some sort of pullback or profit taking coming into the market. Economic news for today. We've got the unemployment claimants weekly ones. They're out at 1:30. FOMC barking. Again, we've got the Z-list member out today at 5. Well, he's out. It's an odd one, that is. He's out twice. Blimey. So he's out at 1:30 and then 5 minutes past 5, and we've also got 6 p.m. we've got a 30-year bond auction, which is negligible, frankly. The yield, though, on those bonds is interesting because it's 4.23, which first time I've actually seen where they've printed the yields for a bond auction. So that's what they'll be looking at to sell off those. I don't know how much is involved in the auction, but they always end up selling them to the primary banks who then feed them through the rest of the system. So let's move on, have a look at the markets, particularly the S&P, but we'll kick off with the Dow as we normally do. So yesterday we saw the market moving back to the upside. As I said, it needed to get back through the 5-bar moving average. It did, and we headed up. We also took out the 89% retracement. I've removed it off the chart. But oddly enough, the market overnight prices are around that point. So we need to drive through that to get through the 38,782 level, to get close to that 40,000, which is around 1,200 points away, give or take, at the moment. 30-minute chart for yesterday, well, it was blast off from the open of the cash market. Prices moving up strongly. Overnight, they're holding quite well. They need to get back above the close and yesterday's high in order to continue to move to the upside. If not, the downside support comes in around the DP, which is also the 50 EMA as well. German DAX down yesterday. Seems to be some weakness in Europe. I'm not surprised if you've seen the farmers rioting and blockading Paris, Germany and Spain. Well worth a look at. And good for them as well, is what I say. Anything that brings this elite down is fine by me, but that's another story. All-time high still of 17,064. Is there on the cards. That was in the pre-market session, overnight market, of course, which we saw yesterday. 30-minute chart, we had a decline in prices, a bit of a bounce there at the opening of the Dow, but then continued. So there's a disconnect yesterday between the DAX and the Dow, which is interesting indeed. So what's going on in Europe to see the DAX being marked down? Market is closer to the low than it is its high, and it's also below the DP at the moment as well. That said, the market is coming off the close and trying to get through the DP, so watch this during today. Any failure to make a decent move through the DP, we'll see the close and the low likely to be retested. And the star performer, as I've said before, when there's been weakness in all the other markets, the S&P has moved to the upside, and I said it was just a matter of time before we got to the 5,000 level. Once we get to this, it'll be interesting to see how the market holds above this. I mean, the insanity continues with these markets. In fact, there was a headline that I saw this morning. Let me just find it for you. This is obviously a premium article, but I couldn't disagree more with the title because, as it says, that's only happened once before, August the 8th, 1929. Wall Street is suddenly freaking out about markets collapsing internals. It's called distribution. What they do is they hold the market on the highs while they offload. And if you've seen the pattern of most of the cash market openings, the markets decline. And that's because they have sell orders that a lot of obviously wealthy people who've run this run or been part of the run over the last few months from the Santa rally all the way through to where we are currently, are offloading some of the stocks. Something is very broken below the market's glass smooth surface. Absolutely. But no surprise that we've headed towards 5,000. We'll probably stay through until the Dow gets to that 40,000 level. S&P yesterday, you can see electronic market sideways, and then we headed up in the cash market. After the cash market, obviously they managed to avoid the selling, or absorbed it as it came into the market. Overnight, the market sitting at the close, not too far off the high, and certainly it was going to have a go, I would have thought, if it's not today, tomorrow, through that 5,000 level, just to make the headlines, and again to give the illusion, as the article says there, that the markets, the glass, wherever it is, where are we? There we go, it's on the subhead, isn't it? Yeah, something is very broken below the market's glass smooth surface. So when you're seeing this go through the 5,000 level, just think about that headline. In the UK, market sideways, as can be seen there. Market stopped at 78% as it moved to the upside, and in the 30-minute chart it was down all the way along with the DAX European issues there. Let's have a look at the US dollar. US dollar is down slightly over the last couple of days as the metals markets find a bit of support. So let's have a look at those. Well, I'll say a bit of support, not a fat lot. The market down again yesterday, as I said it would be, up overnight. It'll come back down and it's going to test the 2186 level. In the 30-minute chart, the London market had 30 minutes down, and then the market was brought back. But then overnight, the market, or into the evening session, the market was soon pummeled, and overnight coming off the low. No surprise there. Up at the moment, but as night follows day, claimant count at 130. LBMA will no doubt give that one a hammer into the downside when they get the opportunity later, along with JP Morgan and also Bank of America. The markets for gold is sideways, not a lot to report there. We're above the 50 EMA, where the market's attempted to come back above this several times. And in the 30-minute chart, we've got again that spike to the upside. But look at overnight, market's down by the low. So despite, as we see here in the 30-minute, silver moving up, 30-minute of gold being pushed to the downside, that can mean only one thing, that there's going to be some red in the gold-silver ratio. So let's have a quick look at that. And there you go, a reversal on yesterday at the moment. But if you also look here, you'll see we're back at 89% retracement. 92 is not off the cards by any means, and if it breaks to the upside, it will continue with the move also. Let's have a quick look at yesterday's trades and the market. So yesterday, the market was moving back up in the pre-market session, traded up to the high, and then went sideways down to the close. Market moving lower. Again, this is what I'm talking about with the cash markets. It's very easy to hold the market up with the futures contracts, and they are there for one reason and one reason only. That's to pump the markets up, bring up the cash values of the shares. It's implied, obviously, valuations with the futures contracts, and then what happens is by doing that, it allows them to offload the physical shares and cash positions at a higher price. It's all smoke and mirrors. So then once the selling's out of the way, the market's then free to move back to the upside. It starts to move back, obviously a bit more selling there. They rotate the stocks, and you'll see there managed a bounce to the upside, as we can see there, up and then back down. We get to the scalp, and then the market starts to turn around. I didn't get out in time on this one, only picking up a few points. The market then came back, and it set a tone really for the rest of the morning, which you can see there, sideways. Again, this is the other thing we've got at the moment, is holding the market sideways. But then if I think about holding cash positions and trying to distribute these positions, then the market is going to be sideways, isn't it, for the first couple of hours as they try and hold it using the futures and derivatives. And then once that's out of the way, the markets then can make its move, which is why you see a clear trend there. and then they start to bring it back, then hold it sideways, and then off we go. Selling out of the way, market sideways down to the DP. As the US then comes on stream, the market, the Dow, as we saw earlier, shot up like a rocket, but the DAX didn't. So there must be some heavy selling going on in Europe, or something's upsetting the market. So this trade moving down, I moved the stop to break even, then followed it down to the BRN, and as it came back I decided to get out, knowing what happened earlier on in the day, and that this on this occasion was the wrong move. But a profit nonetheless, and a profit for the day. The market then coming back to where I actually got out anyway, but there still would have been a few more points on the table. Then we got to the Z-list celebrity Fed member speaking, and then we're into obviously the evening zone. Obviously where it goes black is where I've turned off for the day. Okay, quick look at the 2-minute overnight charts. You can see there at the moment we're coming off the close in this market, and we're gapped above the 200 MA, which is an interesting one. If you can't drive through a resistance area, you jump over it. It's like jumping over a wall. If you can't go through with your shoulder, the best thing is to not get injured, jump over, and then you can move the market up to the DP at the moment. Expect the market to move slightly lower on the opening, but I say slightly lower. Don't forget we're 1 point off 5,000 in the S&P. Any opportunity to do that, and I suspect if they're going to do it, they'll do it in the electronic market mid-morning, somewhere around there. Okay, that's it for this one. Let's see what unfolds during today, but as ever, thanks for watching. See you in the next.